Ralph Lauren bonds and stocks.
So the first thing we're gonna recap on is the leverage and market value ratios from our previous presentation. So just to remind everyone, the debt to assets slowly it was pretty steady for the 2023, 2024, and 2025 fiscal year. Same with the debt to equity, it dropped a little bit and then bumped up a couple. With the coverage, it steadily increased over 2023 to 2025. For the market value ratios, the EPS kind of drastically increased from 2023 to 2024, and then it also did the same thing from 2024 to 2025. It jumped from 400 to almost 575 from 2023 to 2025. Price to earnings, it steadily increased as well, same with their market to book ratios.
So bond type is 3.75% senior unsecured notes maturing September 15th, 2025. The issuer, of course, is Ralph Lauren and Company. Issue dated is August 2018. Per company is NK. Total amount 100 million. And the use of procedures are general corporation purposes, repayment of 3 million of 2.25%, senior notes maturing September 15.
To go over the main characteristics of the bond. So the example we used was from June of this year. So the coupon rate on that was 5%, and it matures 7 years from that date, so June 15th in 2032. The par value is a $2,000 minimum, and then it's multiples of $1,000 after that. The call provision, it's callable anytime before the maturity date, and then it's callable at a discount rate of the Treasury plus 15 BPS plus the accrued interest over time. For the sinking fund provision and the convertibility, there was no clear mention of either of those. So, convertibility, you can't convert it to equity, and there was no mention of the sinking fund provision in the statement they released.
Ratings are Moody A3 stable and SA and PA stable. Changes since our ratings affirmed in 2025 with stable outlooks. Pressure during period has since normalized. What does it mean for investors? It means bonds remain investment grade, low credit risk. Stable outlook supports reliable future interest and principal payments. Contains good liquidity and industrial demand. Reward profile, modest yield, and high rated interest.
We think that the corporation Ralph Lauren chose debt financing over equity financing in this case is because it offers a lower and more predictable cost than equity, and it provides tax deductible interest, it avoids diluting the existing shareholders, and it allowed them to refinance older debt in more favorable terms, and it takes advantage of the strong market demand of corporate bonds as well.
So, for international public offerings, when the company shows consistent growth, stable financial and readiness for disclosure, favorable market conditions, and need for capital to extend. Types are traditional IPO, direct list, SPAC, or reverse merger. There's also Dutch auction, the numbers and prices, numbers of shares based on capital needs, IPO price set by valuation, and market demand. Underpricing also often full subscriptions. Successfulness. strong first day trading performance, capital raising goals met, stable post IPO stock performance, and positive investor analysis met.
We're looking at the daily stock price data for Ralph Lauren over the past 3 years. So the top graph is from this month to November of 2024, and the bottom one is from November 24 to 2023. So the two main fluctuations that we can see on this graph is for April 3rd of this year, where Ralph Lauren hosted a fall 2025 fashion show, and the big decrease of $38 from one day to the next could be due to the audience feedback on the collection or other just general company issues going on with the fashion show. The other one that we saw was in February 8th, 2024, where it increased $27. Ralph Lauren announced their strong fiscal third quarter earnings, which can lead to a surge in stock prices. So, since the company announced that they were doing well, that would make more people want to invest in their company moving forward.
So the adjusted and closed prices. The day of IPO is June 12th, 1997 was the first one. 3 years ago from today, it was $100.43. 2 years ago from today, it was $140.42. A year ago from today, it was $228.67. 1 month ago, it was $319.66. A week ago, it was $33.88. $349.98.
We're looking at the return on investments for Ralph Lauren, or the ROI. So the day the IPO was in the late 1990s, so it has about 30 years to grow to the stock price amount that it is today, which is why that return on investment is 1,336%. For 3 years ago from today, it's about 236.5%. 2 years ago from today, it's 181.6%. 1 year ago from today, it's about 62.5%. Now, this is where it gets a little interesting. So, the 1 month ago from today is only at 1.07%. So, from the 1 month to the 1 week gap, it fluctuated significantly down. I don't want to say significantly. It dropped a couple dollars, but it also boosted way back up past what it was at a month ago. So that's why the 1 week ago from today is sitting at almost 5% on return on investment. Today's price is $339.88.
Is this company a good investment? Yes, it's attractive for the long term, value oriented investors who believe in real life brand strengths, global growth potential, and disciplined capital, dividend and buybacks. It's especially I think Ralph Lauren can executing its strategies and maintaining pricing power despite market headwinds.